Anybody joined? Yes. As part of the balance sheet, we have to show the acceptances and endorsements because these are called contingent liabilities. So where the contingent liability schedule we have, if you look at the format of the balance sheet, we have the contingent liability schedule number 12. So we have to move on to the schedule number 12. There we will have acceptance, endorsement, and other obligations. So there we will write 56500. 56500. So contingent liability. Then borrowings from banks. Since it has a credit balance, it's a liability. So it's already given. The clue is that borrowings. We have a separate schedule for borrowings. So we'll move on to the borrowings schedule. Borrowings is our schedule number 4. And if we have further information, we can write that as well. So what is the information given? Borrowing from banks 77 to 30. So we have borrowings in India from other banks. If it is from RBI, we will write borrowings from RBI. Otherwise, this question says borrowings from other banks, we'll write other banks. 77230 is the amount of borrowings we have got. Then building. This will be part of a asset and it will be under the fixed assets. Premises. This is a premise. Building means premises. Then this is other fixed assets. So this is at the cost 65,000 and 5,000 at cost price. So we'll move on to the last but one asset. So this is fixed assets. In the fixed assets, what we have to write? The cost at the beginning of the year. Cost at the beginning of the year is 65,000 and 5,000. So we'll write premises 65 and furniture 5. 65,000 and other fixed assets furniture 5,000. So we have to write any additions, deductions and depreciation to date. So now we have to see any linked items are there. There are linked items. What is we already have in the opening balance, and further as part of the additional information they have asked us to provide depreciation for the year. For the year, how much we should provide? For building 5,000, furniture 500. So depreciation reserve, how much it will be? Opening balance of depreciation reserve is 800. With that we will add current year depreciation of 5,000. Similarly, for furniture, we have opening depreciation reserve of 200 to add. So the premises will become 59,200 and furniture will become 4,300. So the total of the fixed assets schedule will be 63,500. So one adjustments we have taken care, one side of the adjustment, and provisions we have taken care, depreciation reserve basically, and building and furniture, these two lines are done now from the balance sheet perspective. We still have to provide the depreciation. Then money at call and short notice. How much it is there? 26,000. So we have a separate schedule for money at call and short notice. So it is part of our assets, part of the schedule number 7, where we have balances with bank and money at call and short notice. So how much we have? We don't know whether it is with banks or with other institutions. So we can write at 26,000 gross amount. We will write 26,000. We don't know this breakup, so we need not worry. We can skip that. We can simply put money at call and short notice 26,000. Then commission and brokerage. Now we are moving on to the profit and 300. So now let's move on to the profit and loss schedules. Schedules. Interest earned. Is it interest earned now? No, this is commission and brokerage. Where we have the commission and brokerage? In the other income schedule, commission, exchange and brokerage. So there we will write 25,300. This is part of the schedule number 14. And we'll move on to savings accounts. Savings accounts are our liability. So where it will be part of the deposits schedule. So now it's part of the balance sheet and deposit schedule. Saving accounts 15,000. So for this, now we'll move on to schedule number 3, deposits. Under deposits, we'll have savings deposit. We have separate heading. Under that, we will write 15,000. Then fixed deposits we have. Again, it will be under the deposit schedule 23050. So term deposits, but we don't have the breakup whether it is from banks or whether it is from others. So we'll straight away put it under term deposits 23050. Then we'll move on to balance with other banks. It's part of our assets, balance with others. So 46,350, we will take it to the asset side of the balance sheet, and it is part of the schedule number 7, where we have balances with banks. Then balance with banks. How much we have? We have an amount of 46,350. We don't know whether it is in current banks. 46,350. If they have given the exact nature of the deposits, we have to write under that. Otherwise, we can put it under the balance with banks. Then other investments. So it's obviously it's given as investments. So we'll take it to the investments. That is asset side of the balance sheet. Other investments 55,630. So under the investments, we'll show other investments 55,630. Then interest accrued on investments. It is part of the assets, but which asset it is, that we have to find out. If you are confused, what you have to do is you should always go through the schedules. Whether it is cash and bank balance with RBI, no. Whether it's balance with bank and money at call and short notice, definitely not. Investments. Is it investment? No. It is only interest accrued on investment. It is not investment per se. It's only a interest accrued on investment. So it will not be part of investment. Is it an advance? No. Take it, then it does not belong to all these assets. I will take it to the other assets, schedule number 11. So move on to the schedule number 11, interest accrued. So we have, how much is the amount? 24620. 24620, the other assets. Then we will move on to the reserve fund. What is a reserve fund? It's part of the reserves and surplus schedule in the balance sheet. There we have to give the opening balance and addition or deduction during the year and the closing balance. In that format we have to give. So we'll move on to the schedule number 2 of the balance sheet. We'll quickly move on to the schedule number 2. So statutory reserve, we have to give the opening balance. Amount of opening balance is 140000. 140000. One has joined now. So this is the opening balance of statutory reserve as it is given in the trial balance. Then we'll move on to the profit and loss account. With respect to profit and loss account, what we will do, we will take it to the balance sheet itself. It's the opening balance in profit and loss account 6,500. So straight away we will move on to the phase of the profit and loss account. There we will write profit or loss brought forward. How much is brought forward? 6,500. We will not write opening balance and then we will make the appropriations. Finally, we will take the balance to the schedule. So that's why we bring it here, profit and loss brought forward. Then bills for collection. Bills for collection, again, we had bills for collection, assets account, bills for collection, liabilities account under the unit where we discussed about special transaction in banking companies. We know that it is not an actual liability or actual asset for us. It's only a memorandum account which offset with each other. Since they are called mirror accounts. So they will not affect the balance sheet total, but for disclosure purpose, we have to show it in under the balance sheet. So 43,500 is the bills for collection account. We'll take it to the face of the balance sheet itself. There we will have bills for collection, separate line item 43,500. Then we have interest and on the credit side. So absolutely no doubt it is a income and it will be part of the schedule number 13 of the profit and loss account. So we'll take it to the schedule number 13. Let's move on to the schedule number 13. Interest or discount on advances and bills. So there we will write this. How much? 62,000. So 62,000 will be written here. Then loans. Loans are called advances in banks. So these are loans. 1,81,000. So we have to take it to the assets side of the balance sheet, loans, and they have not told anything about what type of loans these are, whether they are term loans, demand loans, bills purchased or discounted, or this type of a breakup they have not given. So what I will write? So we'll simply write under the loans 1,81,000. Bills discounted 12,500. So separate line item is there. Bills discounted. We will write bills discounted 12,500. Then interest, debit side. There also interest. Here also interest. Then how to find which is an income, which is an expense based on the balance. Here it is a credit balance, so income. Here it is a debit balance, so it's a expense. So expenses where it will be part of that, it will be part of the schedule number 15. So you have to take it to the schedule number 15. Interest expended, interest on deposits, 7,950. Then discounts. Discounts can also be debit or credit, but here it is a credit balance. It means it's a income. So interest and discounts are part of the schedule number 13. You see, interest and discount are major incomes of the bank. So 62,000 plus how much will write? 42,000. But one thing we should remember, this discount includes the rebate as well. How much is the rebate? Rebate on bills discounted to be provided is 4,000. What we will do? We will debit the discount account. So here how we can show that? We can show it as a minus or deduction. 4,000 is a rebate. This rebate will be taken to the credit of next year's profit and loss account. So we have to deduct it now. So the net amount will be 100,000. 62,000 interest credit, 42,000 discount credit minus rebate, discount rebate 4,000. So that will be 100,000. So discounts you have taken care. Rent is 600. Where the rents will be part of, you have to see this main schedule is interest earned. Here it will be income on investment, interest on balance with RBI, interbank funds and others. These are the major incomes. If it is not part of that, we have to look at the other income. So in other income, we have commission, profit on sale of investment, loss on sale of investment, revaluation of investment, land, building, exchange transactions, dividends, income from subsidiaries, joint ventures, all these. So we don't find anywhere the amount called rent. So what we'll do, we'll write it as part of the miscellaneous income. So this will become part of the miscellaneous income, the amount of rent received. How much rent we have received? You have received an amount of 600 as rent. This will be part of the miscellaneous income. So next is called audit fees. Audit fees and debit. It's a expenses. For expenses, we have only two schedules. One is called interest expended and other is called operating expenses. Operating expenses, it will have a lot of line items. There only we have to write most of the expenses. Except interest, all other things will come under the operating expenses. There we have to see for auditors fees, allowances and expenses. It's one of the item, we have to give it separately. So there I will write 5,000. That is the auditor's fees. Then depreciation reserve furniture. We have already adjusted under the assets schedule. Then salaries. Salaries is a benefit to employees, 21,200. So payment and provision to employees, we will write 21,200. Then rent, rates and taxes, again 12,000. Operating expenses, rent, rates and taxes, the expense. Then we'll move on to cash in hand and with Reserve Bank of India, 75,000. Separate schedule, we have schedule number 6, cash in hand and with Reserve Bank. Here it is shown a single item, but they have given the breakup here. So which one we will take? We will take the granular breakup. So this only we will show it in the schedule to the balance sheet. So Let's move on to the schedule number 6 now. So cash in hand. How much is the cash in hand? Cash in hand is 35,000. And then balance with Reserve Bank of India. In current account, 32,000. And in other accounts, it is 8,000. So total is 75,000. In the trial balance, they have given just this total. If the question is not giving any further information, what we will write? We will write cash in hand and balance with RBI totally 75,000 here. We will not write all the other lines. But here, since they given the breakup, we will write cash in hand 35,000, balance with RBI in current account 32,000, other accounts 8,000. So this we have completed. Now we'll move on to the miscellaneous income. Miscellaneous income is 3,900. So it will be part of the other income. Schedule number 14. Miscellaneous income. Already rent we have one miscellaneous item. So with that we have to add another thing also. 3,900 is miscellaneous income. 4,500 will be the total. Then depreciation reserve already we have taken care. Then director's fees. It's the other expense. Operating expense schedule number 16. Director's fees 1,000. So let's move on to the operating expenses. Director's fees 1,000. And postage operating expenses 1,250. So postage where it is, printing and stationery, advertisement, depreciation, auditor's fees, postage, telegram, telephone. We have one line item. There we have to write 1,250. In examination question, you need not write them in advance. You can write as and when you find one item, you can write that item name and the amount here. But here, since I have copied the exact format of the schedule 3, everything is shown, whether it is available in the question or not. Loss on sale of investments. It's a debit balance. It is an expense. But what we have learned, loss on sale of investments, it should be on the other income schedule. So we'll move on to the other income schedule, which is schedule number 14. There what you have to do, you have to show loss on sale of investments as a figures in bracket or number in minus 20,000. This is the only schedule where you can use negative numbers, other income. Since it's a loss, we will put it as a negative number. And then branch adjustments. Branch adjustments mean inter-office adjustment. It is definitely not an expenses. It's only a asset or liability. It can be an asset or liability. Here, whether it is an asset or liability, since it has a debit balance, it is a asset. And where it will find place, since it's a not part of cash or bank balance, it will be under the other assets and inter-office adjustment. Inter-office adjustment is 20,000. Inter-office adjustments, it will be both part of other liabilities and other assets. Here it is other assets. It's a credit balance, we'll show it under the other liabilities. If you look at the schedule number 5, which is other liabilities, again you will have some balance we would have shown here. Since we have a debit balance, we are showing under the other assets. Schedule number 11, inter-office adjustments. So it can be a debit or credit. It can be asset as well as liability. We have to see the balance. Accordingly, we have to fill in the financial statements. Now, rebate on bills discounted to be provided. So, how we have adjusted? We have already adjusted as a part of income. From the income we have deducted. So what we need to do, we have to show it as a credit balance or other liabilities in the balance sheet. So where it will be part of? It will be part of the other liability, schedule number 5. There we have to write rebate on bills discounted and the amount is 4,000. Then depreciation for the year. We have to write building 5,000, furniture 500. Already on the balance sheet we have adjusted. We have to adjust it in the profit and loss account as well. It will be part of the operating expenses. So we have to go to the operating expenses, schedule number 16. Under schedule number 16, you have to go to the depreciations on bank's property. For building, we have provided 5,000 and furniture, we have provided a depreciation of 500. So total depreciation under operating expenses will be 5,500. Now both sides covered. Then included in the current account ledgers or account overdrawn to the extent of 2,500. So what we have done in the current deposits, we have added 2,500. This should be added to the advances as well. So in the advances, we have to add this 2,500. It's part of the advances. Schedule number 9, cash credit, overdraft and loans repayable on demand. We can add an amount of 2,500. And then we have to transfer to statutory reserve 25% of the net profit. That while preparing the profit and loss account, we will do. So essentially we have completed the trial balance and all the adjustments except this one adjustment of statutory reserve. So now what we have to do, we have to first complete balancing the schedules of profit and loss account. So we'll start with the schedule number 13. We have to total that. Only one item is there and total is 100,000. Okay. Then we have to total the schedule number 14. Schedule number 14, we have 3 items and the total is 9,800. And schedule number 15, only one item, total is 7,950. Then schedule number 16, several items are there and the total is 45,950. So then what we have to do, we have to take these totals to the profit and loss account. 100,000, 9,800, 7,950 and 45,950. So since it's an Excel sheet, I have just linked the schedule. So the totals will automatically flow there. So schedule number 13, 1 lakh. Schedule number 14, 9,800. Schedule number 15, 7,950. Schedule number 16, 45,950. If there are any provisions for NPA, standard assets or any contingent liabilities to be provided, it has to be done here. And working note we have to give. Fortunately, there are no such adjustments in this problem, so we will leave this as it is. So how much is our profit or loss? So current year revenue is 1,09,800, expenses 53,900. So net profit or loss for the period is 55,900. Then we had some profit or loss brought forward. How much brought forward? 6,500. So total is 62,400. Then now we have to make some adjustments. What adjustment? The only adjustment we have left it. Transfer to statutory reserve 25% of the net profits. So what should we do now? Now we have to transfer this. So how much we should transfer? 25% of the current year's net profit. Where is the current year's net profit? 55,900. And how much we have to transfer? 25%. What will be the amount? Amount will be 13,975. how much will be the balance? The balance will be 62,400 minus 13,975, 48,425. So both these will go to the schedule number 2, reserves and surplus. One under the statutory reserve, another under the balance of profit and loss account. So now I am moving on to the schedules, balance sheet schedules, schedule number 2. So statutory reserve I have. What I should do? Additions during the year. I will just link it here. Additions during the year is 13,975. So what will be the closing balance? Opening balance plus additions. This will be the closing balance. Capital reserves I don't have. Share premium I don't have. Revenue and other reserves I don't have. But I have a balance in profit and loss account. I will link it here. Balance carried over to balance sheet 48,425. So now this adjustment is also done and my profit and loss account is done. Now I should total up the schedules of balance sheet. So schedule 1, there is only one item, 1,90,000 is the total. And schedule number 2, I have to add closing balance of statutory reserve and closing balance in the profit and loss account. The total is 2,02,400. Then I should total the deposits. I have demand deposits, savings deposits and term deposits. The total is 137,550. So this total I have to change 99,500 plus 15,000 plus 23,050. It is 137,550. Then borrowings. There is only one item of borrowing, 77,230. Other liabilities and provisions. There are two items. Employee security deposit, rebate on bills discounted. Total is 11,420. Then cash and balance with Reserve Bank of India, 75,000. Total of 3 items. Then balance with bank and money at call and short notice. There are 2 items and the total is 72,350. So total I have to do 46,350 plus 26,000, 72,350. Then I have investments. Investments total, there are 4 type of investments. Total is 167,130. This is correct. Then advances, I have 3 type of advances and the total is 1,96,000. Then fixed assets, I have 2 fixed assets. One is premises 59,200. Then furniture 4,300. Total is 63,500. Then other assets, I have inter-office adjustments and interest accrued. The total is 44,620. Contingent liabilities 56,500. Only one item, 56,500. So what I should do? I should take these totals to the balance sheet. So first 1,90,000. So you can see here, as I have already linked, it will show 1,90,000. Reserves and surplus total 202,400. And then deposits 137,550. Then borrowings 77,230. So this is the total. Then schedule number 5, 11,420. So my 5 schedules are over. I'll check the liabilities total. It is 618,600. This is correct. Then I will fill the totals from liabilities schedules. Schedule 6, 75,000. And schedule 7, 72,350. Schedule 8, 167,130. Schedule 9, 1,96,000. Then schedule 10, 63,500. 1,96,000, 63,500. Then other assets, the final schedule of the balance sheet 44,620. So when I total the asset side, all the 6 schedules, I have a balance of 618,600. So I'm just checking whether my assets and liabilities are matching. This minus this, what is the difference? Difference is 0. So my balance sheet is tallied. Now I will take the total from contingent liabilities. This will not affect the total of my balance sheet, but this has to be disclosed as part of the balance sheet. 56,500 separately. We should not add this to the balance sheet total. This is outside the balance, off balance sheet item. This is called. Then bills for collection 43,500. I have straight away put up this. There is no schedules for this. So now what I have completed? I have completed my profit and loss account as well as the balance sheet. So this is the process you have to follow while answering the examination question. So one thing is to remember is we have to memorize the format of the balance sheet, profit and loss account, and the various schedules. That's it. Once you remember all these, then you can complete this problem easily. Any questions or doubts so far?
No, sir.
It may look very easy while solving, but when you work out, then only you will have the flow. So I will strongly recommend you to practice these problems on your own, then you will get more clarity. You can finish it off quickly. Otherwise, it will take enormous amount of time because you have to fill up so many pages and you should remember all the schedule names and all. So I will highly recommend you to practice many times. Then only you will gain the speed. Otherwise, there is no complexity, but it will take a lot of time in examination situation. So there will be a 15-mark question, but you will end up spending 1 hour if you don't have the practice. If you have the practice, you can quickly finish it up in 20-25 minutes. There won't be much to think, much to analyze. Just if you remember, just put up the format and fill up. That's it. But it will take time if you don't practice. So you end up wasting time, which you can use it for other problems. So that's the one catch in this. So if there are no questions or doubts, now we'll take some 10 minutes break. Then we will start with the one more problem on preparing the profit and loss account. There some adjustments are also there. We will learn that, how to do that. Okay, now we'll break for 10 minutes
Okay.
and resume exactly after 10 minutes. Please come back. Hope you guys have joined back. So we'll start with the next problem. Let me share the screen. Shall we start?
Yes, sir.
I expect you guys to be more interactive, asking questions, doubts, but so far in this class, no one has asked any questions or doubts. I'm not sure whether you guys are understanding or not. Even for saying good evening, good afternoon, good morning, also, I am not getting any response. I would like these classes to be more interactive and as close as real time classes where we interact, where we chit chat, but not happening here. So, at least in going forward, be more interactive. You can ask anything, no harm in that. Okay, let's move on to the illustration number 3. From the following information, prepare profit and loss account of AC Bank for the year ended 31st March 2011, and the figures are in rupees 1000. Interest on cash credit 1820, interest on overdraft 750, interest on term loans 1540. So here they have given breakup of interest based on the type of loans: cash credit, overdraft, and term loans. Then income on investments 840, interest on balance with RBI 150, and then commission on remittances and transfers 75, commission on letters of credit 118, commission on government business 82, profit on sale of land and building 27, loss on exchange transactions 52, interest paid on deposit 2720, auditors fees and allowance 120, directors fees and allowance 250, advertisement 180, salaries, allowances and bonus to employees 1240, payment to provident fund 280, printing and stationery 140, repairs and maintenance 50, postage, telegram, telephone 80. So if we were given a question like this, it's going to be a very easy one. We have to prepare the schedule number 13, interest income, 14 for other income, 15 for interest expense, 16 for operating expenses. What we have to do, we have to take item by item to the respective schedule and put the total in the profit and loss account. That's it. It's going to be a very simple question. But here, it is not that simple. They are asking us to apply your knowledge regarding other aspects as well. What are the other aspects? In the other information, they are giving interest on NPA is as follows. So there are 3 type of advances: cash credit, overdraft, and term loan, and they are giving figures for interest earned and interest collected. So what is the significance? For interest on NPA, should we go by interest earned or interest collected? So we have to refresh our memory. So what we have learned in concept, IRAC norms. So IRAC norms, we have studied that income recognition, performing assets, income recognized on accrual basis, non-performing assets, income recognized based on cash receipts. So what is the asset we are talking about? We are talking about non-performing assets. They will always use the short form NPA, non-performing asset. So we should go by the interest collected. But in the ledger, how they will maintain? They will maintain in terms of interest earned. So we have to look at the interest income. We have interest income, interest on cash credit, overdraft, and term loans. So these numbers are based on income earned, but these amounts also include income from NPA, which should have been accounted based on receipts basis. So these three numbers needs adjustment. That is the first thing you should remember as soon as you read this NPA. So these three needs adjustment. What sort of adjustment, how to do, we will learn. Then classification of non-performing advances. Standard 3000, substandard 1120, doubtful assets not covered by security 200, doubtful assets covered by security for 1 year 50, loss assets 200. So as soon as you see this classification of non-performing advances, what should come to your mind? Provisioning. We have to make provisions. It's implicit because we have studied that provisions are compulsory. It's not optional. So we have to see provision on loans and advances. What is the percentage? It depends on whether it is standard or non-performing, performing or non-performing. For standard assets, it is based on the nature of advances. So now we look here, there is a standard. Is there any classification, whether it is MSME, real estate, commercial real estate, anything is given? Nothing is given. So what we should do, we have to give one working note saying we assumed all standard assets to be other advances. So other advances means then we can have one particular provision percentage. What is that provision percentage? 0.40. We will apply this particular percentage. So provisioning on standard assets over. Then substandard. In substandard, what we should know? We should know whether it is secured or unsecured. Because see the table. Do you remember this table? We have this particular table where we have provision percentage on NPA. There we have to see if it is substandard, we have to see whether it is secured or unsecured infrastructure loan with additional safeguards. Here this question is silent. They say substandard. Then what we have learned, if the question is silent, always assume it is secured. So we will go by the working note. We have to give one working note. Since the question does not specify the type of asset, then we assumed that all the substandard assets are secured. Then we can give only this particular percentage. Secured advances, substandard provision percentage is 15. Then doubtful assets not covered by the information in the question itself. So there is no doubt, there is no need for working note. So we have to go by the doubtful assets unsecured. What is the provision percentage? 100%. Then doubtful assets covered by security for 1 year 50. Then what is the percentage? We have to go by the doubtful secured, and up to 1 year it is 25%. Then loss assets. We need not worry about whether it's secured or unsecured and how long it has been loss asset. Because for loss asset, irrespective of the time period, irrespective of whether it is secured or unsecured, the percentage is 100%. So we should recollect all this information now. Then we will move on to investments. Investments total 2750. Now we should recollect what we have studied about investments. Investments, we have studied that they should be classified as held to maturity, held for trading, and available for sale. 3 different buckets. And held to maturity not to exceed 25% of total investments, and the valuation is at cost. So if you have 100% of investments, 25 should be HTM and it should be valued at cost. Other balance 75 should be either held for trading or available for sale. both the cases valuation is at mark to market, not at cost. So these concepts you should recollect. So they say total investment is 2750. So out of this 25 should be held to maturity, balance should be available for sale or held for trading. So they give the additional information. Bank should not keep more than 25% of its investment as held for maturity investment. So they are again reiterating the market value of its rest 75% investment is 19,75,000 as on 31/3/2011. So this 25% should be shown at cost in the balance sheet. The other 75% should be shown as cost or market value, whichever is lower. But in the case of AFS and HFT, we have to show it at market value only. If it is more, it will be a gain. If it is less, it will be a loss. So these points we have to take care while preparing the balance sheet. So first we will start with the working notes. For this provisioning of assets, we have to have a separate working note. Then for investments, we need a separate working note. So first we will complete this working note so that while solving the problem, we can proceed quickly. So I am moving to separate sheet where I will have provision on NPA. There I will write working note. Since the question is silent, we assume all substandard advances are secured and amounts are in 1000. So I will start with the standard asset. What is the amount of standard asset? 3000. And NPA substandard 1120. 1120. NPA doubtful and unsecured. Doubtful and unsecured is 200. NPA doubtful up to 1 year, it is 50. NPA loss asset, it is 200. So these are the various type of assets I have. This is the classification of assets. Now I have to assign a provision percentage. For standard asset, it is 0.40%. For NPA substandard, since we have assumed all these are secured, we'll go by the provision percentage given, where we have substandard secured is 15%. And NPA doubtful unsecured. So NPA doubtful unsecured 100%. NPA doubtful up to 1 year. So go to the table. NPA doubtful secured up to 1 year, 25%. NPA loss assets. So NPA and loss asset 100%. So you have to multiply individually this amount and provision percentage, then we will get the provision. So if you add them up all, you will get the total provisions to be made is 592.50 thousands. So total provision is 592.50 thousands. Then we have to make provision for investments also. Why? HFT and AFS should be valued at market price, HTM at cost price. So now we have to see what is the proportion of HFT AFS and how much is HTM. So the total value of investments, how much is the total value of investments? It is 2750. So the total value of investments will be 2750,000. Of this, held to maturity will be how much? 25%. So 25% will be 2750 multiplied by 25. percentage. It is 687.50. And how much will be HFT and AFS? It will be 2750. Sorry, 2750 minus L2 maturity. The balance will be 2062.50. So the cost price is, in the case of HTM, it will be the cost itself, 682.50. Rather, I'll put it here. HTM, the cost price is 687.50 and 2062.50. What is the market value? Here we need not worry about the market price. We have to show it in the cost price itself. For HFT and AFS, we need the market price. So how much is the market price? For 75% of the investment, it is 19,75,000. So in terms of thousands, it is 1975. So the cost is 2062, but now the market value is only 1975. We have to make a provision. How much? 2062.50 minus 1975. You have to make a provision of 87.5 thousand. This is because the decrease in value of investments. So provisions and contingencies. For provisions and contingencies, what you have to do is you have to add the NPA provision as well as provision for diminution in the value of investments. So that value will be 680. So you have to write working note. Here itself you can write working note. Working notes. Provisions and contingencies. Working note number I can give. Working note number 1. Just wait a moment. So now these two adjustments we have made a working note. This one we will do it in the schedules itself. So now we'll start with one by one item and we will take it to the respective schedules to profit and loss account. So I am preparing the format of the profit and loss account. I will write illustration number 3. Illustration number 3. It's a profit and loss account of KC Bank for 31/3/2011. So I will write profit and loss account of KC Bank for the year ended 31st March 2011. The amounts are in rupees thousands. Amounts in thousands. I have current year and previous year. So I have the format of profit and loss account. Now I will move on to the format for schedules. I will write schedule introduced to the profit and loss account. Of AC Bank for the year ended 31/03/2011. Okay. Okay. So now I will start with the items given. Interest on cash credit. So major income. So it will be coming under the schedule number 13. So under schedule number 13, we have interest or discount on advances and bills. So under that, we have categorization like interest on CC, OD and term loan. So we will give the breakup in the schedule. Since we have all the breakup, we can give it. Just a moment. Okay. So interest on CC, how much? 1820. I will write interest on CC is 1820 here. Because some adjustments to be done, I am giving here. Then interest on OD 750. Since we don't have a separate working note, we can show it as part of the schedule itself. And then interest on term loans 1540. 1540. So what is that adjustment we have to do? These figures are considering the interest earned, but what we need to consider? We have to consider interest collected. So from these figures, we have to deduct these and add these. So from this 1820, what I have to deduct? Interest based on earned. How much is 820? And how much I should add? Interest collected 400. Minus 820 plus 400. Minus 820 plus 400. Similarly, interest on OD. Interest earned I have to deduct, collected I have to add. Minus 450 plus 100. Minus 450 plus 100. Then interest on term loan. Minus 750 plus 250. Minus 750 plus 250. So what will be the net amount for the current year? It will be 1820 minus 820 plus 400. It will be 1400. For OD, it will be 750 minus 450 plus 100. It will be 400. Then in the case of term loans, 1540 minus 750 plus 250 will be 1040. So the total amount will be 2840 with respect to interest. So these three items and this income classification, income recognition also we have taken care now. Income on investment, there is no adjustment, straight away we'll take it. Income on investments 840. So income on investments, it is 840, schedule number 13. Then interest on balance with RBI 150. Interest on balance with RBI is 150. So then we'll move on to commission. This will be part of the schedule number 14. Commission on remittance and transfer 75. So commission on remittance and transfer. We have 75. Then commission LC, that is letters of credit, is shortly called as LC 118. And commission from government business, it is 82. Then profit on sale of land and building 27. Profit or sale on land and building 27. And we have loss on exchange transactions. Even though it is a loss, we have to show it as part of the other income schedule. We will show it as a negative number. So loss on exchange transactions will be a minus 52. Then interest paid on deposits. This will be part of the what? It will be part of the expenses. Interest expenses. Interest on deposits. The amount is 2720. Interest on RBI, others, nothing is there. So we'll move on to the operating expenses. Auditors fees and allowances 120. So auditors fees and allowance, we'll write 120. Directors fees and allowance 250. And advertisements 180. You have advertisement and publicity, the amount will be 180. Salary, allowance and bonus to employees 1240. So this will be part of the payment to and provisions to employees 125. We will pay Provident Fund. Whenever there are employees, then Provident Fund Act is applicable. What it says, the employer should pay 12% of basic and DA to the Provident Fund. He has to make employer's contribution to Provident Fund. Why we are incurring this? This is on behalf of the employees only. So it's part of the provisions and payments to employees. So we have to add payments to and provisions to employees. We have to add further amount of 280. Printing and stationery 140. Printing and stationery 140. Repairs and maintenance 50. So repairs and maintenance, we have an amount of 50. Postage, telegram and telephone 80. Postage, telegram and telephone 80. So these are all the operating expenses we have. We don't have information about depreciation or other items. So whatever given in the question, we have already taken to the respective schedules. Now what we need to do, we have to total each of these schedules and take it to the profit and loss account. Excuse. So now we have to see the other information. This information affects one of our schedules, which is schedule number 13. We have taken care of. This will also affect our profit and loss account, but not any of these schedules 13, 14, 15, 16. It will be separate item on the face of the profit and loss account. So this is not going to affect our schedules. Investments, again there is a provision for diminution in the value of investments. It will not affect any of our schedules to profit and loss account. It will be on the face of the profit and loss account, which is provisions and contingencies. So we are sure that we have taken care all the information for all the schedules. So now we have to proceed to total up the schedules. So schedule number 13, we have a total of 3830, and schedule number 14 we have a total of 250. This is a negative balance. Still it will be part of the income only. It will not be taken to the expenses. Interest expended 2720, and then operating expenses, we have so many items, it will be 2340. Now we will take these totals to the format which we have prepared for this problem. I have the schedule number 13. So I have already linked up. It shows the value 3830. Then schedule number 14, it is 250. Then schedule number 15, it is 2720. Schedule number 16, it is 2340. Then we have to make provisions and contingencies. Under provisions and contingencies, we have to show what is the provision for standard and NPA assets. How much it is? We have already worked out here. Provisions for standard as well as non-performing assets is 592.50. So we have to show it here. Then provision for investments. How much we should show? Provision for investments will be 87.50. So these are on the face of the balance sheet. It won't affect any of the schedules. Always remember this. Any provision for NPA, provision for investment, it will be on the face of the profit and loss account itself. It will not affect any of the schedules. Don't take it to the schedules. Then we have to find out what is the total profit or loss for the year. How much is the total income we have? We have a total income of 4080,000. We add up these two, 4080. Then how much loss we have? Sorry, expenditure we have. The expenditure is very high, 5740. So expenditure is more and our income is less. Then what we will land up? We will land up making losses. How much is the losses? It will be 5740 minus 4080, a negative figure. It shows net loss for the year of 1660. Any profit or loss brought forward, no information in the question, so we will leave it blank. Then we will go to the appropriations section. When we can do appropriation? Statutory reserve, it is mandatorily we have to transfer. Even the question is silent, we have to transfer 20% to the statutory reserves. But this applies only to the net profit for the year. Are we making any profit for the year? No. This year there are no net profit. Net profit is 0. So appropriation to statutory reserve will be also 0. Other reserves also 0. Then what will be the balance that should be carried over to the balance sheet? It will be an amount of 1660. So this is the solution for this particular problem. There is a net loss, so there are no appropriations. This will be taken to the schedule 2, reserves and surplus in the balance sheet. So we have completed this particular problem. So what is unique in this problem? It is not only the classification, they are testing our knowledge about income recognition and asset classification norms. So these norms are very, very important. So we have studied little time back. So what is income recognition? We have to classify the assets based on performing assets and non-performing assets. What is a performing asset? An asset will be performing till it becomes non-performing, or if the repayments of interest and installment and principal, if it is repaid on time or the overdues are 90 days or less. If the overdue crosses 90 days, it becomes non-performing asset. Then for the first 12 months, it will be called as substandard asset. After 12 months, then it will be called a doubtful asset. When the management, auditors or RBI is of the opinion the amounts are uncollectible, then it is classified as loss assets. What is the significance of classifying assets? So, in the case of performing assets, income is recognized based on accrual basis or interest earned. In the case of non-performing assets, income is recognized based on receipts only, not based on interest earned, interest received. Then another impact is that we have to make compulsory provisions on loans and advances. So provision on standard or performing assets should be made at the following percentages. If the loan is given to small and micro enterprises, 0.25%. The loan is given for the purpose of commercial real estate, 1%. Commercial real estate, residential housing, 0.75%. Housing loan at teaser rates, 2%. All other loans, 0.40%. If the question is silent, ignore all this. Give one working note saying, I assumed all the standard assets belong to all other loans category, and always use this percentage, 0.40%. This is the residual rate. Then moving on to the NPA, non-performing asset. They will always use the short form NPA. So there it is based on whether it is substandard, doubtful, or loss asset. We'll start with the loss asset. It is very simple to remember. If it is loss asset, whether it is secured or unsecured, we will still make provision of 100%. If it is substandard, we have to see whether it is secured or unsecured. If the question says secured and unsecured, we have to follow that. Otherwise, we have to give one working note saying the question is silent about the classification. We assume all the loans are secured. So we can apply this particular rate, because in a banking, normally 90 to 95% of the loans are secured. Only around 5% of the loans are unsecured. That's why it is more reasonable to assume all the loans are secured. So substandard, secured means 15%, unsecured means 25%. If it is doubtful, we need the classification secured or unsecured. If it is unsecured, no confusion, straight away 100% provision. If it is secured, then we need to see how long it has become NPA. If it is doubtful, up to 1 year, we have to provide 25%. Doubtful 1 to 3 years, 40%. Doubtful more than 3 years, then 100%. So on these lines, we have to compute the provision on NPA. And there is something ECGC and DACGC we have discussed. There we have to classifying secured and unsecured. We have to take care of the portion which is guaranteed by ECGC or DACGC. First, we have to take the loan amount outstanding. From that, you have to deduct the value of security available. That will be called secured portion. In the remaining portion, ECGC or DACGC would have provided guarantee of partial guarantee, 50%, 25% means that you have to exclude. Then we will find out the unsecured portion. So there will be 3 portions in case of ECGC and DACGC. Apart from the secured and unsecured, there will be a portion which is guaranteed by ECGC or DACGC. That portion you should not make any provisions. You should make provisions only for secured and unsecured portions. All this we have already learned. They may ask a standalone problem where you will have to calculate the income to be recognized or provisions to be made, or sometimes as part of the problem where you have to prepare the profit and loss account or balance sheet of the bank, you will be asked to make adjustments for these concepts. So in whichever way, these concepts are very, very important. These forms of the backbone of accounting for banking companies. So you should be very thorough with the conceptual knowledge as well as these numbers. Then only you will be able to solve the problems in banking companies. So with that, we are completing with the all the units in banking companies. If you have any doubts or questions, we can discuss now. Are there any questions or doubts? I will circulate this Excel sheet today, so you will get it. Apart from that, any questions or doubts? So there seems to be no questions or doubts. Thank you very much for your patient listening, but I will expect you guys to participate more. Definitely, because it seems like just a one-way traffic. Definitely, I want more discussions. Then it will be very